Okay, so I'm going to start for today. GBP, JPY, for example, these are the, whenever you start any chart, make sure you have the key levels lined up, all of them. And everyone is hearing me or no? Can you hear me all? You can text in the group if you can hear me. And now, coming back to the point. So do you see the chart? If I make, you see the chart like this. So in order to have the reference point, you can see that this is the support level, but you have to go to the daily. How I am putting the support and resistance levels. I will, for example, go to the daily, put this to the line, and I will find out which areas have been tested. So in that case, I can see that these areas have been tested. Like there are more overlapping during those areas. So this is the kind of a good resistance. This is also support, resistance, support, resistance. So you need to know these areas always. So first, always you have to look at the whole bigger picture, not the, not just the 1 hour or 2 hour, look at the whole picture. Once you have put all the daily and daily resistance and everything, then you switch it back to the candlestick and to the 15 minutes for the formation. So now when you start a day, let's say I will now go to rewind and I will take you, let's say I will show you how the market starts to move here. Let's do this. So let's say if you can see my if you can see my chart, when normally when you come to the computer, and this is what the chart is showing you, and wait a second. Yeah, so you see that it is going down, so you will not enter now. You will, I've just started playing, so market is going, see, trying to touch the level. If you see, the candlestick is moving, so it's going down. Now you will not enter here, you will enter at the retest. So it will, once again it went up and retested this level, here you will enter. Okay, so how you are going to do, I will hold it on for a second. So how you are going to do this, you will take the short position. So why I'm doing this, this is for your real life example. You will put a stop here, and let's say you will put the reward or the take profit on the next daily level, and you have to actually hold it. Okay, so here let's see what happens next. Market tries to go up, and then it's going down. Let's see when it hits our take profit. Yeah, it hit our take profit and we are out. So this trade was what was this, 39 pips stop loss, and what is the, it is 2:2 and 91 pips take profit. So now after hitting this take profit, you will be out of this trade. Okay, you will not enter this, you will let it run. It will try to go back up again. See how it is going, and this is the low of the channel. It's a downward channel. You can see it again try to come and retest this, but you can again join, but it will not be, it has not touched it. So let it touch some key level. So right now it's consolidating, and you can always check. I will move forward. See, as soon as it touches the key level again, you see it is again thrown back down. So what you can do is short position, you can again here take another short and stop loss here. Watch now. I'll just make it a quick bit. And it's trying its best to take out your stop loss. This this is the entry point. So uh, it will try to take you out, but it will not be able to take you out. So let's see what happens next. Does it goes to or take profit or not? And yes, it does goes to it and then goes down. So again, once this line crosses down, and if you want to enter a sell, you can enter here. Okay, but I would not recommend after this. It will consolidate for that day. It was 11 June. So see, again it has come and it says you enter here again. So if you have taken this trade, your take profit is hit here. It was 135 pips take profit on a 46 pip stop loss. So it is a 1:3, almost 1:3 trade. Any questions about this? Anyone has questions? No one has questions? No questions at the moment? Okay, questions. So you understood how, this is the back testing, how I back test my strategies and everything. So here as well, and let's look at another pair maybe. Let's look at gold. These are the ADRs, okay? So right now, for example, if we let's say I am here. So you can see this, that the gold is very bullish, and I will make it ADR 30 days ADR, so it will show you 30 days. So here, this is the key channel level, top of the channel. As soon as it will hit this level, there will be a selling pressure. So how you are going to trade this? As soon as you see on 15 minutes, it's it is trying to cross this level, but it's not able to cross this level. It makes an M formation. So now so where you enter on an M formation, this is an M. You will enter on here and you will take a short position. Let's say here. And you can either take until here or let's say here. This should be your stop loss and take profit. So this is, you see, your take profit is hit in matter of time because you entered on a key level, and your stop loss was just what is this called, 10.03 pips, and your take profit is 31 pips. Okay, so that's an amazing result. Risk to reward ratio 3:1. So after hitting this level, it is again consolidating. So you will have a look at the structure again. Never, you should never enter. You should never enter on the, 1 second, I'll just remove this. Yeah, you should never, for example, if you want to enter a sell, you should not enter on a red candle, not enter here, because then your risk to reward ratio will be affected. If you want to enter a buy, you should have you see the rejections here, one, two, so many rejections, means this is a key level and it's holding. And key levels are very important, you know, in gold, in any other, especially on gold. Gold respects key level. I'll just fast forward it and see what happened, what has happened here. And what is the lesson, you know? On the Friday, everyone wanted to sell. So here is the problem. When I told you guys don't sell 1737, this was the situation. You see, 1 second again. Yeah. Why is it not? Why is it not? So as soon as it reached this key level 1732, you know, everyone started seeing this, that it is, you know, it's coming down, and somehow people would say that it's an M formation. And but then after making this candle, it went up again. So the bullish pressure was so much that I was, you know, I was thinking that this is ADR low, and the market is moving towards ADR high, and it's in the middle of the range. So I will not sell at this level, never in the middle, or never above. You can buy, but you cannot sell. But still, even if you buy, your stop loss will be too much. So at this level, when the red candles, if you go to the higher time frame, the bear candle was gone, you know, they tried to push it down. The sellers came in this key level. This was a key previous selling level, 1732, 1734. This was a key level, and 1737. But market break through this level. It means with a strong bull candle, it meant you should not be in this trade. So on that, I advise all of you to let it go. And it was what other thing that would point or confirm that the market is making a higher high. Market is bullish because if you see, it is constantly making uh, higher lows and higher highs. It's constantly moving up the channel. Let me see what is it saying. So yeah, Avas, you can ask the question in the message maybe.
I am Avas from Pakistan. Sir, I want to know which vessel you use for designs and cross.
No, I cannot hear you properly. Can you speak a bit louder?
Hello.
Yes.
Sir, I am Avas from Pakistan.
Uh,
Sir, I want to know how you draw these lines and graphs on charts.
these
Which
are all,
vessel that
you know, these are technical things. You can read all of these in Baby Pips or something like that website. If you want to learn, then you can take. These are all of these red and blue lines are the daily support and resistance line, key levels. You know, basically where the market pivots. You know, either it goes up or goes down, or it changes its momentum. So that if you want to learn, then you can go and do the Baby Pips to learn the technical. This is not the, you know, if you want, I can, let me show you how I make the channels. Let's have a look at anything like, let's look at cat JPY. So cat JPY, yeah, I will just ignore this for a while. So if you see here, I will make it this way, it's better, you know. You see, you have to see at which level the price is touching the, at least there should be three levels, 3 points where the horizontal line is touching the channel. So it has touched here. How I am drawing it, I will just remove it and make it again. I'll just take horizontal line, draw it here. It is touching my, and the, here. Now I will clone. See, you can say it should be at least 3. So here, so you see this channel. As soon as and it keeps testing this channel lines, comes down, test. So after the breakout, this is the breakout. I'll just remove this. See that the breakout is at the key level again, the daily resistance. W formation goes up, again retest, again W formation goes up. So it's just the formations that you need to take in consideration everything. And Canadian dollar was strong against JPY because of oil. As soon as oil plunged, the Canadian dollar also plunged down. And it will always see this, this is the key level. M formation down, then comes back to retest this level. See, first time it tried to go above this daily key level 81.726, and then it came down, but still it went again and retested 2 more times. So 3 times, 1, 2, 3 times it, and then it came a 4th time to test this daily level, and then it was just if you have taken this trade, for example, if this M formation, you will take, for example, here, it will, you will take trade here and until here, your stop loss will be here. So it will be on this trade, it will be 33 pips stop loss. It will not be much, and it will, the take profit will be 120 pips. Okay, so it is a good risk to reward ratio. Always risk to reward ratio matters, and on this occasion the risk to reward ratio was amazing as well. So yeah, always take high probability trades. Don't when the problem happens, or you or take your stop loss is hit, when you take trades in between here, between the key levels here, this is not trade unless it is either rejected or is pushed higher from a key level, breaks through a key level. There is a trade. It's not, the trade, the zigzag is not the trade. So who has the next question? Okay, you guys did not see that screen, sorry. Okay, so what I was telling, okay, here is the screen. This is the channel, and I mentioned, and I will tell again, sorry, I don't know what happened here. So I was saying that these are key level. The try to break through. How it in the real life, how it will look like, I will tell you. I'll tell you how it will look like in the real life. Let's go back, and where is the so here. So this is the bullish impulse, it tried to break through this level, and everyone is thinking never ever buy like this, this is not a buy unless it is retested. So this, when this you can buy at this when this retest here, but once it breaks through, because it was a bull rally for a long time, and there was literally a retest expected, a retrace it. So see, the next candle starts to make and comes down. So you can see now the bull rally is kind of over, since you see a selling pressure there. And now you see the M formation, you are happy, and it goes through, but you will not enter. Or if you want to enter, you can enter here, but you should know that the market maker will come back. Market maker will come back and retest at least 3 times. So stop loss above the, so you see now what's happening. It is going up, but is unable to break through the stop loss because the bull rally is only over, and then there comes the impulse towards the downside, another M formation, and it's just going down. The risk to reward ratio on this trade is 2.79. It's again good, one ratio, almost 3. So yeah, I will just fast forward it. What happens? So it, these are the pullbacks. Don't worry about these. It will come back up. Try to take you out on your stop loss, but it will not be, since the bullish pressure is over and the bears have entered. The formation is done. Again, it retested this level, could not make it, and then is now, it's just going down. See, I'll just fast forward it for you guys. There was a lot of choppy action because of the CAD strength. That when the, so you see, in a matter of, in this case, this trade had to be held for, let's say, a few days. So almost it has hit the second, it has hit the take profit. If you just let it run, there is a lot of patience required. So it started, the trade started on 16th, may pass midnight, and it is right now 18th. So 2 days this trade had to be held for this kind of take profit. So see, it is trying to push up, but is unable to because CAD is weak, since the oil had the pullback. I'll just take it down, forward. So here it is. It will come down. So yeah, almost it is hit. Just for your reference, it is almost. So I would, when the pair starts ranging like this, consolidation, you can come out of your trades. So what is the question? Okay, how you recognize that the trend is changed? So when the consolidation starts, this is a consolidation. It what it can do now, what it can, there are many ways to, when it breaks the channel. For example, this is the, I will tell you, for example, this is a channel, and it is trying to break through this key level, but it's unable to. When it's rejected, it just goes on. And you should know that the fundamentals as well, the news is there about oil. What it might do now, if you look at the left side of the structure, it will do something, it can do something like that, this, and then again go down. And the best part is there is news for Japan that is coming. Let's have a look. Yeah, Bank of Japan PMI flash. So it will give strength to Japanese currency if the news is good, and this will push CAD JPY down, more further down. So yeah, it is like this. There are many ways to check if the direction is changing, when there is a rejection, when the channel breaks out. So let me show you. What are the other questions do you guys have? You can ask. Any questions, guys? This strategy is break and retest strategy and formations and wedges. Wedges I can see. I have the wedges as well. Any questions, guys? Any pair you want to check? Let's have a look at NAS 100, NASDAQ 100 US. So NAS 100, amazing. It is following the upward channel right now. Unless this channel breaks out, how we will sell? If this channel breaks out, retest and fails, then we will enter here. I'm just telling you how if you want to enter short, enter here and let it reach this level. Stop loss will be here. And yeah, so it is quite a good trade with again 1:2. We will see. But right now, since there is monetary stimulus in the US market, there are a lot of liquidity in the market, hence the market is trigger happy and it's going up and it's bullish for now. Yeah, so any questions, guys? Any pair you want to check? Any questions? For enter in long, you want to enter yeah, I would, there are many things. Even if there is no channel, I would see the key level. For example, here, how this long happened. This key level got broken when it came up. The market makers came up, and then what did they do? They made a W formation. Well, I will enter on the second leg of W. When they will, I will not enter here. I will let it come to retest. So it came again and retested here. My long would be like this. I will enter here. My stop loss would be here, and my take profit the last higher high. Let's say one level up. If you have patience, you can to the end of the channel to the top. So this happened, by the way, almost. This happened. See, almost it reached here 10128, and I am thinking with the current stimulus it will cross and reached. Let me have a look at the 1 hour channel. What 1 hour? It will reach yeah, at least 10,300. But there will be a pullback. Never enter on a green candle. Always enter on a bearish candle after the pullback has happened. So the mostly you go into a drawdown because you don't wait for the pullback to happen. Let's have a look at USD CAD. So USD CAD, from this action you cannot tell what is happening, why it took us to. Okay, so this, let's have a look what happened here. Yeah. So in the real life, you will be seeing this, market is going down, but that there is a gap on the left side of the market that market want to fill. After filling this gap, and you see how I created this zone. This is the level that market has retested several times, if you see. And this is on 1 hour. See, there is a lot of consolidation, rejection, after this market went up with a gap. So it's a strong buying level. So banks will come at only the key levels. So let's look what happened here. Yeah. So market came down, took the liquidity from here, and then shot up, and right now I already made some good profits on this trade and still on 25% of the trade. And I am thinking that it will really go to 1.48 in the coming months, but you have to hold this trade for months. That is the key thing. Right now the trade is at this level, and this is the key uh, demand zone. From here the market is rejecting and is not allowing to go down. So from here, this level you can buy, and then you can buy until this level. You see that there is the consolidation on the left side of the structure. You can target for a short buy like this, and here with a very tight stop loss, 21 pips stop loss to 230 pips take profit. And as soon as the market will open, this will shoot up. USD CAD will go into a nice buy, at least 30 to 40 pips. So any more questions, guys? You want me to check anything? We have 4 minutes left. If USD CAD, if USD CAD goes, oil, if oil will come down, USD CAD will go up. If oil will go up, USD CAD will go down. So it's inversely proportional, as I told you guys earlier. And this is another GP USD trade that I took. This is a key level, and this was my 1.26. So yeah, this was one trade, and this was the second trade. This was my second trade. Nice, you can see. But in order to recognize these channels and these key levels, you need to know how to make them. First, how to build these key levels. And yeah, and also just to let you know, guys, there is more news coming on GP. Steel production forecast, blah blah blah. Flash PMI still is very important. Manufacturing, and yeah, since you know that British economy has shrunk by 20%, and that is why there is a sell-off on GBP/USD. So there is a fundamental reason as well. And why I made this key level here, because from this level, market rejected several times, even if you look on the left side of the structure. So any questions, guys? Or is that all? No questions, I believe so. And Yuri, you have any question? See, I'll be happy if you guys make money, but remember, don't enter on the Asian session. Enter either on the London rush hour or the New York crossover during the London and New York session. Okay, I can have a look at Euro USD. What is it doing? Euro USD. Yeah, I would take a trade once it retests this level here. I will take the trade. Euro USD. I will not take a trade, or once the market will come down and retest this level, then I will enter, and it will be like this here. So it will be a nice trade. I'm just telling you guys, risk to reward ratio 1 to 5, 33 pips stop loss, 173 pips take profit. So there might be a nice sell off coming. There is Euro news, consumer confidence flash sale coming, and there is US news as well. So there is a lot of news that is going to come. So yeah, news is either going to pull it back or put it into a more bearish structure. And that's all for today. And see you again next week. Have a nice evening, guys.